The MAGGI noodles in India are safe.
On the basis of samples of various MAGGI noodle variants drawn, and we found that at 2 places the samples were also drawn of this product, for which the product approval has not been granted.
The Central Food Regulator cracks the whip on MAGGI, recalls 9 variants of the instant noodles, calling him unsafe and hazardous. Nestle CEO leads the damage control, says MAGGI is safe to eat and promises to bring it back to the market soon.
The world's top oil producers decide to stay the course and keep production high. OPEC decides to maintain producing 30 million barrels every day. Dismisses oversupply fears but admits that oil will not hit $100 a barrel anytime soon.
The U.S. economy adds about 280,000 jobs in May, beating estimates. Wall Street wavers as investors fear the U.S. Fed may hike rates sooner than later. European markets stumble after Greece misses the deadline to make its loan repayment to IMF.
Markets stumble in late trade to cap a disappointing week on the Wall Street. The Nifty drops 80 points from the day's high. Major indices have lost 4% this week.
At some level, India has been a good boy in a bad world.
The economy is on the right track, says Uday Kotak, but expects corporate earnings to pick up only in the 4th quarter of this fiscal. Also urges the government to raise foreign investment limit in Kotak Mahindra Bank to 55%.
What do you make of the government's efforts at this point in time?
We've done precious little. We're all waiting anxiously for the government to actually lay down the rules.
After Deepak Parekh, industrialist Cyrus Poonawalla hits out at the government, says nothing has been done to improve the ease of doing business. Also says he's still interested in the Grosvenor house, but claims that Sahara has taken the property off the block.
The monsoon finally arrives in Kerala after a 5-day delay. Met Department believes conditions are favourable for rains, but adds a note of caution, says rainfall may reduce later this month.
The Vice Chairman of Ashok Leyland, R. Sheshasai, will be the new non-executive chairman of Infosys. This comes after K.V. Kamath resigned from the post to take charge of the newly proposed BRICS Bank.
It's being dubbed as the biggest data breach in history. U.S. suspects Chinese hackers may have stolen personal data of about 4 million U.S. government employees. China denies the charges.
The MAGGI noodles in India are safe.
We're coming to you from Monte Carlo from the EY World Entrepreneur of the Year Awards. What do you make of the government's efforts at this point in time?
We've done precious little. We're all waiting anxiously for the government to actually lay down the rules and get on with it.
Global growth is certainly going in the right direction, but it's like the airplane's moving down the runway. We'd like it to take off. So it's growing very slow.
E-commerce is here to stay. E-commerce will succeed in India.
From Narayana Murthy to Uday Kotak to Cyrus Poonawalla, a lot of big exclusive interviews lined up for you over the next 30 minutes. Good evening and thanks for joining us here on India Business Hour this Friday. I'm Nayantara Rai in New Delhi. With me, Surbhi Upadhyay, joining us from our Mumbai studios. Hi, Surbhi.
Hi, Nayantara. Let's kick things off then with the day's trading action and yet another disappointing session on the Lal Street. Well, a disappointing day to cap really what's been a terrible week for the street market. Saw some wild swings and then a late sell-off wiped out all gains. The Nifty lost about 16 points. At one point in the day, it was actually clocking gains of nearly 80 points. The Sensex also saw all of its gains wiped out in that last hour. Nayantara?
Well, you know, it may be a little late, Surbhi, but it's finally arrived. The Indian Met Department has said the monsoon has finally hit Kerala today, which signifies the official arrival of the monsoon season in India. The Met Department says the rainfall over the last 48 hours has been fairly widespread across the southern state, and that the rain-bearing clouds have advanced over a large part of the Arabian Sea and the Bay of Bengal and is headed towards land. These clouds should land over Karnataka, Tamil Nadu region within the next 48 hours. The Met Department is still sticking to its stance, though, saying the possibility of a deficient monsoon remains to loom large and that the amount of rainfall could reduce in the 2nd or 3rd week of June. Meanwhile, people in Mumbai also woke up to a pleasant surprise this morning, with the city witnessing a spell of rains. The pre-monsoon showers did bring a welcome relief to the city, even as Mumbaikers wait for the monsoon to arrive. But what I can tell you, Surbhi, is that it's still blistering hot in New Delhi. We weren't as lucky as you. We got no rain today.
Well, I think you guys had your fair share of the spell earlier this week. But yeah, we had a little bit of a drizzle and it was a welcome respite for us Mumbaikars. Well, let's move to the other big stories that we're tracking today. India has been the good boy in a bad world. That's the word coming in from Uday Kotak of Kotak Mahindra Bank. Kotak was India's representative at the EY Global Entrepreneurs Awards at Monte Carlo. CNBC TV 18's Shireen Bhan caught up with Kotak and began by asking him about the state of the economy and the road ahead for our equity markets.
I think you've got to really define Achhe Din in a particular manner.
Okay.
First, if you look at the macroeconomics, current account, inflation, fiscal deficit, Achhe Din are there because you're significantly better than what you were last year.
Right.
Yes, oil has helped, but all these three factors are very much under control compared to what they were last year. So from the point of view of macroeconomic stability, we've made a lot of progress.
Okay.
However, when you look at the combination of, at some level, India has been a good boy in a bad world. Therefore, if you look at easy monetary policy by the US, by Japan, by Europe, and now China.
Yeah.
India has maintained a good discipline both on monetary policy and fiscal policy. So when you're doing that, you then say that we are ready to ensure sustainable macroeconomic conditions, even if it means growth comes with a little bit of a lag and comes slower in terms of the trajectory.
Okay.
Therefore, I'm still of the view that India is on a positive growth path, but dheere dheere.
Okay, what does dheere dheere now mean? Do you believe that maybe at the end of the calendar year, we are actually going to see a turnaround? That means in H2, we are going to see a real turnaround, whether it's corporate earnings, whether it is demand, whether it is consumption?
I think, Shireen, another important point which is keeping India under a little bit of pressure is excessive leverage of large parts of India.
Corporate India, yeah.
So that leverage needs to be recognized either as a problem and
but isn't it recognized as a problem already?
Not fully. I don't think there's a full recognition of what needs to be done with the excess leverage. So we need to correct balance sheets of corporate India and their impacts on banks and really get our act together on fundamental structure of Indian balance sheets. And that, I think, is an important point where I think there is a clear role for debottlenecking. I think some of it has happened, but a lot more can happen. But there is some level where recognizing reality is as important.
Recognizing reality by the promoters or recognizing reality by banks?
Both. Because promoters have to be clear that either they bring in new capital or they run the risk of losing their companies. And banks, to be clear, what is the fair value of their debt?
So you don't then see any significant turnaround as far as corporate earnings are concerned?
My sense,
at least over the next 6 to 8 months.
My sense is corporate earnings turnaround. I am more of the view we will see it towards end of FY16, which is probably closer in the fourth quarter is when I see it. And of course, we have to watch it and we've got to work for it. Unlike the past, where a lot of Indian business were able to show corporate earnings by quick arbitrage. This is a time for hard work, getting the balance sheets right and building a sustainable business. It's not a quick fix. It is not about steroids.
It's not about steroids. You're absolutely right. But speaking of steroids, let's talk about the equity markets. And it looks like the Chinese market is on steroids at this point in time. And it seems to be coming at the cost of the Indian equity markets. Today, we're down about 4% for the week as far as our markets are concerned, on the Nifty specifically. Do you see the significant volatility that we've now seen over the last few weeks continuing? Do you see the markets correcting even sharply from this point?
See, China looks like a bubble. I'm not close enough, but the sense I get is when you open a few million retail brokerage accounts a week, it feels and looks like a bubble. And a bubble may have short-term joy, but creates sustainable pain, as we have seen even in the case of Japan, or the cause of the global financial crisis in the US. Therefore, I would much rather India doesn't go down the bubble route, and to a certain extent, between May 2014 and now, we have seen excessive exuberance in markets. So markets are coming to reality with the fact that growth will be gradual those sustainable.
So what then is your growth outlook? The government is still holding on to its projection of 8% plus growth for FY16. Given where things are and given the fact that numbers don't seem to be adding up, look at what core sector tells you and then look at what the headline GDP number tells you. In that context then, what is the kind of growth outlook? And also linked to that, what do you see in terms of further monetary action from the Reserve Bank? Because the governor said he's front-loaded the rate cut. What more can we expect?
Shireen, first of all, I'm confused between the new GDP and the old GDP.
Everybody is, sir.
But if I go with the new GDP, we are talking about March 2015, new GDP numbers at about 7.3%, but the GVA being much lower for the last quarter. Therefore, if 7.3 is the average for last year, I would be happy if we did in 2015-16 7.5 plus. And that is still a progress, but a steady, upward, gradual progress. But we must not at the same time compromise on current account, fiscal stability, and ensure that inflation remains under control.
Rate cut? Do you anticipate one more rate cut in this calendar year, or do you think that we're done for now?
I may be a contrarian, but my view is in calendar 2015, there is a possibility of one more 25 basis points.
So between October and December?
More towards the end of the year.
Quick question as far as your quest to try and hike your FI limit is concerned, because that keeps getting deferred by the FIPB. Have you had conversations with the government on what the issue exactly is and what their apprehension is?
I think if you look at the position, we are currently at foreign ownership of 48%. We were much lower, but post-merger of ING Vaishya Bank, which had foreign ownership of 70%, and ING itself at 43%. Our merged entity foreign ownership increased to around 48%. So we are still within the 49% limit at which we need FIPB to approve a higher holding. We have gone to FIPB asking for 55%. Now with reference to FIPB, we understand they are looking at the entire issue for the entire insurance industry, which is what is the meaning of Indian owned and Indian controlled? Does it mean that the promoter company which holds shares in the insurance company cannot have more than 50% foreign ownership? If that is the interpretation, then there are 6 insurance companies today in life and general who are in violation of this. So forget us, we are still below. But there are 6 already who are above 50.
So have you heard from the FIPB? Have you heard from the government?
I think FIPB is considering it, and I'm sure they will be applying their minds to it, and we await feedback from them.
If the FIPB were to rule against the hike that you are suggesting, and of course the implications, as you pointed out, will be for the others as well, what would that mean then?
I don't want to second guess what the government of India wants to do on this.
Okay, so still awaiting that higher cap as far as foreign investment into Kotak Mahindra Bank is concerned. That's Mr. Uday Kotak. But moving on to the other big story this evening, India's food safety regulator has finally cracked the whip on MAGGI noodles. 9 variants of the noodles have been recalled, and the Food Safety and Standards Authority has termed them as unsafe and hazardous. This move comes after Nestle recalled all MAGGI products late last night, despite claiming that all these products were actually safe to eat. Meanwhile, Nestle is not taking it lying down. They have decided to take legal action against the ban on MAGGI noodles. The company has moved court against the Uttarakhand government's 3-month ban on MAGGI. The court has asked the state government to reply within 15 days. Meanwhile, food safety regulator FSSAI has told Nestle to stop the production, import and sale of all 9 variants of MAGGI noodles immediately. Nestle has said that it has taken MAGGI noodles off the shelves across the country because the faith of customers has been shaken. Delhi, Bihar, Madhya Pradesh, Gujarat, J&K, Tamil Nadu and Telangana have also temporarily banned MAGGI. Interestingly, however, West Bengal says that they've not found any objectionable material in the instant noodles. Meanwhile, Reliance Retail has pulled out 11 instant noodle brands, including MAGGI, from its stores.
Today, Nestle finally broke its silence. There was a press conference chaired by Nestle's global CEO who flew into India to lead the company's damage control exercise. Addressing the media, he claimed independent tests done by the company proved the product is safe for consumption. The global CEO conceded the product has lost trust with the consumers, and that is why it has been temporarily taken off the Indian shelves. He's also promised that Maggi is going to be back in the market at the earliest, adding that at no time does the company add MSG to Maggi, but yes, certain ingredients such as groundnut, onion or wheatgrass already contain MSG. Here's more from the global CEO.
Product quality and safety for Nestle is paramount. It's the first priority. That translates in trust with consumers. That trust is shaken. And it is now our intention, and with the consumer in mind, that we're going to work and do everything in our what it takes, everything what it takes, to work also and to clarify with the authorities the situation, and to have the Maggi noodles back on the shelves as soon as possible.
Nantara from CNBC, you're the global CEO, you've come at a time of crisis to India. If you give us an idea of the kind of ministers, the kind of people in the government that you might be engaging in. This is a new government that has talked about ease of doing business. How easy is it to do business in India post this fiasco?
We have been in India for more than 100 years. We have been in India for more than 100 years. We are part of India. And with the government, we are talking to the authorities. We are talking to the relevant authorities who are the food safety authorities. We may speak to ministers, but basically it is authorities that are managing and are governing the quality of products that we are engaged with, and that is the prime priority for us. Doing business doing business in India is good, because there are the consumers. We have been for 100 years here. We have many products. They are beloved and trusted brands, and I don't think there is any problem there.
Maggi accounts for 30% of your revenues here. While it might be your immediate priority to once again get the trust back of the consumers, the rest of your plans, are you going to go ahead with them? Are you rethinking anything at all about the country?
Look, I said, for Nestle, wherever Nestle is, our success also is linked with that trust relationship with consumers. The trust relationship with consumers on a specific product has been shaken, we feel, because of a confusion, not because of facts. The product is safe. This is important to us. India is important to Nestle, and that's why I am here.
The global CEO of Nestle over there saying he has got 1,000 batches of Maggi tested and they are all safe. But Nestle's claims of Maggi noodles being safe for consumption did not cut the eyes of the Central Food Safety Regulator. Incidentally, the report of the Central Food Safety Regulator came during the press conference. The FSSAI has highlighted 3 major violations and ordered a recall of all the Maggi variants from the market. Priya Sheth and Archana Shukla have that story.
Nestle India finds itself at the wrong end of India's food safety framework. The Food Safety and Standards Authority of India says that Maggi noodles violate not just 1 but 3 safety standards. The order stems from the regulator's analysis of test reports submitted to it by various state FDAs.
We have gone through the reports. We have got the reports from every state now, and we are of the confirmed opinion that the Maggi product was not following the ingredients and the safety measures which were required, and that is why we have come to this conclusion that the product should be recalled from the market.
According to the regulator, lead content has been found to be higher than the permissible limit of 2.5 parts per million in several of the samples that were tested. Nestle had argued that the testing methodology was incorrect. The company says the product comes in 2 parts, noodles and the taste maker. So testing should be done on the combined food item instead of individual components. But the FSSAI has rejected this argument, saying, and I quote, "The prescribed standards have to be applied in respect of each of these 2 components independently and have no linkage with the processing of the end product as it is consumed." End quote. The second violation has to do with mislabeling. The FSSAI has taken exception to the fact that the label on Maggi noodles specifically says no added MSG, whereas the product is found to contain monosodium glutamate. The company had argued that the message was only to inform consumers that it does not add any MSG to the product, except whatever MSG may present from natural sources. But the argument hasn't cut ice with the food regulator. FSSAI says there was no reason for the company to add such a misleading label on its packaging. It observes that the exercise seems to be driven by an undue commercial motive that seeks to gain advantage by creating an earnest impression in the minds of consumers. We learn that the company has now agreed to remove this labeling from all future packaging. The third violation, according to the FSSAI, is the very existence of MAGGI oats masala noodles with taste maker. The regulator has said that this product did not go through the requisite risk and safety assessment and approval process before being launched, and therefore must be withdrawn from the market.
On the basis of samples of various MAGGI noodle variants drawn, and we found that at two places the samples were also drawn of this product, for which the product approval has not been granted. I don't rule out that there would be a number of such products for which the food business operators are supposed to obtain the product approval.
In light of these findings, the FSSAI has ordered that Nestle India stop further production, processing, import, distribution and sale of all variants of MAGGI noodles. The company has 3 days to furnish a compliance report and has to give daily progress reports on the recall process. It has also been given 15 days to show cause as to why product approvals for all 9 variants of its instant noodles shouldn't be withdrawn. In Mumbai with Priya Sheth, Archana Shukla.
All right, now moving on to the big global story this evening. The world's top oil-producing nations have decided to stay the course and keep oil production high. The move is being seen as an attempt to squeeze high-cost producers out of the market. Oil prices softened soon after that decision was announced. Not just the OPEC decision, the rise in U.S. non-farm payrolls data is also impacting the crude oil prices, as we can see, still trading slightly lower. Well, let's first take a look at what OPEC has announced today. The cartel will continue to produce 30 million barrels of oil per day. OPEC believes that global economy is recovering and that the demand and supply equation remains quite healthy right now. And in another significant statement that was made today, oil producers agreed that prices may not touch $100 per barrel anytime soon. They've also dismissed fears of oversupply in the market.
Geopolitical risk nowadays, in my view, will weigh a lot lighter than what one day it was. But it has its weight, and it may change up or down. It hasn't been fixed. It has never been fixed.
Now, one country which could play a huge role in the movement of oil prices is Iran. If the country manages to strike a nuclear deal with the United States, then it can sell oil to Western nations. Will that lead to a further glut? Iran's oil minister doesn't think so. He spoke to CNBC's Steve Sedgwick before the OPEC announced its decision. He said Iran is looking to increase production in the near future.
I don't believe that we will witness a fall in the new fall or new drop in oil price in the market. But a main issue for Iran, I should emphasize that, is to achieve the traditional market share of Iran in the oil market.
And how many more barrels a day would that be? How many more barrels are you trying to put onto the world market?
I think during maximum, immediately, it means during 1 or 2 months we can increase 500,000, and during 6 or 7 months we will increase it to 1 million barrel.
So if U.S. and Iran manage to sort out that one issue, you'll see another 500,000 barrels a day being added in 2 months from now. Joining us to talk a little more about oil is Miswin Mahesh, the energy analyst at Barclays. Thanks for joining us here on CNBC TV 18. I want to begin by asking you that, the $100 a barrel days look quite far from now. What's your outlook as far as crude prices go? And what is more important at the moment? What we're seeing as far as the OPEC production, or perhaps the strengthening of the dollar?
Right. So in terms of our forecasts, we think Brent will average $60 a barrel this year. And in the OPEC meeting this week as well, we've seen increasingly even the hawkish side of the members in the group calling for even a price of $80 a barrel being a lot more fair. Even during the press conference today, El Badri mentioned that $100 a barrel looks like a hard target to achieve this year, and even in the coming few months, after that as well. So it does look like we are in this new era where prices are lower for longer, and volatility is here to stay. I would just add that in terms of the OPEC meeting today, them just resoundingly saying they won't do any cuts, it just shows that they've got full backing for their decision in November.
So, Ms. Wynn, what would you say? I mean, there are so many factors at play. Let's just leave aside geopolitics out of the entire equation, because that's completely unpredictable. Where would you expect crude to end this year? Because we also have this whole talk of a lot of Iranian oil coming into the market, and we just heard the minister there. So, what's your sense?
Right. So on Iran, the market's choosing to price that into the forward curve only once the ink hits the paper with the nuclear negotiations. Now, since the interim deal, we've had quite a few tectonic plates shift, both in the Congress as well as within Iran's political framework. So, at the moment, the oil market is not factoring Iranian supplies as much as the oil minister would say 500,000 barrels per day in 6 months, 1 million barrels per day in a year's time. It just needs to be seen what happens by the end of June once we see the full text of the agreement. So for now, the market is choosing not to price it in.
All right, Ms. Wynn, we'll leave it on that note. Thanks so much for that quick call on how oil is doing after that OPEC meeting. Another important trigger for global markets today was the U.S. jobs report, which came out for the month of May. The economy has added 280,000 jobs, and that's significantly above market expectations of an increase of just about 220,000 jobs. The unemployment rate has inched up marginally to 5.5%, but it's not a very alarming increase. Bonds and stocks did not take too kindly to that data. That's because they fear that the U.S. Federal Reserve could even prepone its proposed rate hike. And we saw that movement in both the U.S. dollar, which surged very, very sharply, and also yields, which started hardening after that data came out. Antara.
Right, and there's a fresh twist in the Greek debt crisis. This follows news that the country's government has decided not to pay the International Monetary Fund a €300 million repayment due today. By delaying that payment until the end of June, Greece has drawn up new battle lines with its creditors and fueled fears over the country's grip on the Eurozone membership. As a result, we'll bring up the Greek ATHEX for you so you can see for yourself how it is reacting to all of this news. Last I checked, it was down over 3% in trade. And there you go, it's now down by almost 5% in trade at the moment. And the 10-year bond yield has also, as you can see, that's in the green at the moment. There's also growing anger within the ruling Syriza party over the demands being placed by creditors before additional aid is released. All eyes will now be on the Prime Minister Alexis Tsipra's speech later in Parliament today. And that situation in Greece has weighed in on markets in Europe. Let's bring up the frontline indices for you. This is something the investors have been fearing for a while now, that Greece was not going to pay the IMF €300 million on time. The German DAX right now down about 143 points. The French CAC also seeing sharp cuts of 66 points. The British FTSE meanwhile down by about 0.8%. And with that, it's a wrap on this edition of India Business Hour. Have a great weekend.
Thanks for being with us. Good night.